Is here. We always call him Mr. Super Bull. He deserves that title, and he's going to get it again. The bull market continues, says Goldman Sachs. It continues into next year. They're looking for, what, a 9% increase in the S&P to reach 5,100. Right now it's at, what, 4,400, I think. Oh, no, 4,677. So, are you with that? 5,100 by the end of next year?
Yes, Stuart, I think that might be a little bit conservative. We're starting to see some really strong economic rebounding numbers today with retail sales, yesterday with the Empire State Manufacturing Survey. And so the bearish outlooks on the street are calling for massive multiple contraction, because the story that we have been seeing coming out of the pandemic is that earnings have simply been too low. So at the end of June, the estimates for the third quarter were 24% growth. At the end of September, the estimates for the third quarter were 27% growth, and we're tracking right now just under 40% earnings growth. So I would say the earnings expectations for next year of 9% earnings growth are probably far too low. So if we see a 12 or 13% earnings growth in the S&P 500, for us to have any sort of massive sell-off or contraction of earnings multiples would need interest rates would need to go absolutely wild. We know the taper is not going to be done till next summer. The Fed has not even remotely discussed running off the balance sheet, and maybe we get 1 or 2 rate hikes next year. So I think there's plenty of room to run.
You do this to me every time. I introduce you as Mr. Super Bull. I set some target at the end of next year for the S&P, and then you come on and say, well, that's just too conservative. No, it's going to be much more than that. Every single time you're on this program, you do it. And I might add, Michael, you've largely been right. You have. Now, just one last question, real fast. Supposing President Biden appoints Lyle Brainerd to be the new chair of the Federal Reserve, someone who would probably print a great deal of money, is it possible that the market would like that?
You know, I'll be interested to see how that plays out. It's my expectation that they will, that Lael Brainerd will be the next Fed chair. She's part of the MMT crew. She is an ultra dove. It'll be interesting to see the reaction to that. But I think a lot of the inflation problems we are seeing right now are supply chain driven. So for her to either raise rates, not raise rates, increase QE, decrease QE, I don't know that that's going to really affect the underlying economy. But I'd say that $4.5 trillion in cash that's worth 6% less now than it was a year ago is going to find its way to some sort of financial asset. I'm thinking the stock market. So I think we're in pretty good shape anyway. I think Jerome Powell has done himself no favors by trying to play both sides of the fence. So I think Lael Brainerd is more of a disciple of the left, if you will. So I would expect her to be picked. I have no idea how the market's going to react to that, though.
Okay, fair answer to a good question. Michael, you still deserve the title of Mr. Super Bull, and you'll be back again very soon. And don't do that to me again.
Thanks, Stuart.
Thanks, Michael.